Good day everyone, my name is Ha. I'm a student of James Cook University, and this semester I'm studying a subject with name International Political Economics. It gives me the chance to aware and learning what happened in the world which I was not interested before. But now I'm starting research global issues, policies, world orders, and all the changes which were anticipated as well as surprise in our economies nowadays. And today I would like to talk about the trade wars between US and China. Let's see how much I understand about it. So what is the trade wars? Basically, a trade war is an economic conflict resulting from extreme protectionism in which states raise or raise the tariffs or other trade barriers against its others in response to the trade barriers raised by the other parties. Not only China, the US had also engaged in trade wars with Japan and the EU over the spectrum of domains such as the textiles, vehicles, TVs, and currencies, and steel. And what is a tariff? Tariff is simply a tax or duty to be based on particular class of imports or exports. In theory, taxing items coming into the country means people are less likely to buy them as they become more expensive. The intention is that they buy the cheaper local products instead, boosting your country economies. And then Trump administration has been using the tariff on import goods to try to force the Chinese to change their way. And what is the trade deficit? It's the term meaning the difference between how much your country buys from another countries compared with how much you sell to what country. And the US has a massive trade deficit with China. Last year, it widened by $43.6 billion to $419 billion. And why and how did the trade happen? Well, the US and China trade war started in early 2018 when the US administration under President Donald Trump and his words accused China of unfair trading practice and enforced tariffs. China has responded and retaliated with the tariff of their own. Further escalations would lead to impacts on trade and production of all over the world. For more details, I will highlight some big events of the trade war. In July 2018, the US placed 25% duties on around $34 billion of imports from China. Then the China fight back by imposing 25% tariff on 545 goods originating from the US worth $34 billion. August 2018, Washington imposed 25% tariffs on another $16 billion of Chinese goods. China in turn applied 25% tariffs on $15 billion of US in goods. September 2018, the United States placed 10% tax on $2,000 billion of Chinese imports. China's response by placing customs duties on $60 billion of US goods. The end of 2018, Xi and Trump agreed to cease-fire to the trade wars at the G20 summit in Argentina. Spending a tariff increase of 10% to 25% of $2,000 billion of Chinese goods. December 2018, China spent a tariff for US cars and auto parts from 3 months from January and also by US soybean. On May 2019, after negotiations break down, the US increased tariffs on $2,000 billion worth of Chinese goods from 10% to 25%. China's response by announcing that will be increased tariffs on $60 billion worth of US goods from June. In May, 2019, the US effectively bans on US companies from selling the hardware after placing the Chinese firm's entity list. The end of May, China announced that it will establish its own unreliable entity list. And the 1st of June, China increased tariffs on $60 billion worth of US products. And the end of June, President Xi and Trump agreed a trade war talks at the G20 summit in Japan, delaying the imposition of new US tariffs up to 25% on $300 billion worth of Chinese goods. Trump also suggests some of the restrictions placed on US companies selling products to hardware will be lifted. So why the US target to China? Let's see. China's economic rise has been dramatic. In 1978, China's GDP at the market price was just 6% of America's. 2018, it had grown to 66%. When considering local spending power, China already overtakes America. China is the world's largest exporter with an annual export volume of over $2.2 billion, compared to the US export is over $1.5 billion in the second place. Moreover, China has been the world's lowest-cost manufacturing center, and it became an export-oriented global technology hub. According to my research, China's economic influence has indeed increased. However, America still holds the leading position in all stock, credit, energy, and commodities markets, and the US has remained the dominant power in the global economy. Therefore, there is still no unified understanding of the balance in the scale of the two economies in the scientific literature. In my analysis, there are three major concerns brought the US into the initially trade war. Firstly, the concern that China's chronically large trade surplus will depressing job creation in the US. Secondly, the concern that China were using illegal and unfair methods to acquire US technology at an effectively discounted price. And finally, the concern that China seeks to witness national security and its international standing. A global trade war could hurt customers around the world by making it harder for own companies to operate, forcing them to push higher prices onto their customers. The US-China trade war will have a significant adverse impact on the world's economies. By distorting the global trade war flows, the conflict will boost the production to more expensive locations, forcing up prices and reducing efficiency. The end price of products will be higher than it would have been otherwise, adding to inflation and potentially forcing faster tightening of monetary policies in many markets. Global trade flow is also set to slow, particularly in the short term, as mounting US-China tensions disrupt existing supply chains and dampen investors' confidence. The greatest impact will, of course, be felt in the US and China, but many other economies are likely expensive collateral damage. There will be the winners as well as losers. Tariffs tend to shift trade more than they reduce it, and as importers in China and US look more alternative suppliers, new opportunities will open up for the exporters in third-party markets. Some of those beneficiaries will be in the countries such as Mexico or Europe. However, the lion's share of the range for the trade war will fall into the countries in Asia. Winners from the trade war will benefit primarily from the US tariff, which target broad swaths of the Chinese manufacturing industry. However, countries in Asia will struggle with the benefits significant from China. Reciprocal tariff on U.S. imports, which largely targets automotive and agricultural products, include soybean. Although earlier this year, China cut tariffs for soybean imports from regional trading partners such as India, Laos, South Korea's production capacities for soybean in most Asian countries cannot match that in Brazil or Argentina. Some U.S. soybean shipments originally destined for China may unilaterally be returned to certain Southeast Asian countries, such as Thailand and Vietnam. But China will likely turn to Latin America to make up its soybean supply shortfall. Similarly, countries such as Germany, Spain, and Canada are likely to make up for any shortfall in pork imports. For summary, if we look at the number alone, it is very difficult to make the argument that US is winning. In the year up to the end of June, US export to China slumped 33 billion or 21%. Chinese export to US by contrast actually grew a little, rising 1% or 4 billion. In July, according to the number just announced, China's surplus with the US grew still further, and over the first 7 months of the year, China's total surplus was worse and hefty, 168 billion. This is exactly the outcome that Trump were determined to avoid when Washington imposed a tariff against China in 2018. The China-US trade dispute is a long-term issue, and perhaps the epitomes and harbingers of the broader changing bilateral relationship. However, there is still huge potential for trade and investment cooperation, considering the strong complementarities of the two economies. The two have responsibilities maintain stability of the trade system and should solve the trade conflict through multilateral mechanisms. No one wins a trade war.